All right, ladies and gentlemen, welcome to another episode of the Resource Insider Podcast Quarantined Edition. And today I'm sitting down and talking with a gentleman named Craig Parry, who I think many of you may know or at least have heard of. And now Craig has a Rolodex of jobs right now. He is the chairman of Skeena Resources. He is the chairman of Vizsla. He is the CEO of IsoEnergy. He is the chairman of Blockhead Technologies. He is one of the founder and currently still a partner of EMR, one of the world's biggest mining-focused private equity firms in Australia. And he is a geologist now based in Canada. So Craig, we've invested in some of the deals that Craig has put together. We've gotten to know each other over the last year or so through those sort of interactions. And I wanted to sit down with Craig because he has got his fingers in a lot of different pies, a lot of different either industries or parts of the mining industry. And I think he's going to offer our viewers a great view on what's going on in the world, what's going on in the space, and just some good advice on how he's managing the situation himself. So ramble over without further ado. Craig, thanks for taking a few minutes out of your day today.
Thanks, Jamie. Great to be speaking with you.
So I think, where should we start? You're based in Vancouver now. Obviously, you're from Australia originally, and you're a geologist. What are you doing today in your own words, and where's the focus of your attention for people who haven't heard of you before?
Yeah, absolutely, Jamie. So of course, we're in a bit of a state of flux at the moment. So, fast-changing, fast-paced environment. So, of course, the focus over the last 2 weeks has been, locking things down, bedding things down, making sure that our teams are all safe and healthy, and doing a run around the fences and making sure there aren't any holes. And a lot of that, of course, is ensuring that all of our companies are well financed, putting our cash management strategies in place, making sure our budgets are all tight and bedded down so that, if this goes on for too much longer, we're in good shape and everyone stays safe and healthy, of course. So that's been the focus the last couple of weeks. More broadly and generally, I suppose, my day job, IsoEnergy, I'm the CEO there. We've got the latest and greatest high-grade uranium discovery up in Canada, Saskatchewan's Athabasca Basin. And that actually is what led me to Canada. I was a co-founder of a little company called NextGen Energy back in 2011. And NextGen, of course, we discovered the Arrow deposit. Lee Courier, the CEO there, led the team to that fantastic discovery. So that's, that will, when it's built, be the world's biggest uranium mine and probably the highest margin mine on the planet. So we had great success there, and we decided to spin IsoEnergy out back in 2016 to continue our strategy to acquire and build and explore new uranium projects. And we met with success there, 2 years discovering Hurricane. We actually put out some very good drill results there today. Some spectacular typical Athabasca Basin grade, 7.5 meters at 14% U3O8. So we're enjoying that. We're making great inroads into the uranium business. We love the uranium business, of course. We can come back to that about when we get onto the commodity perspective. And then, I had the great fortune a couple of years ago of meeting a gentleman by the name of Michael Connett, and Mike is the CEO of Vizsla. Mike and I started a little cobalt company, which we sold pretty quickly back during that last cobalt boom. And Mike's an incredibly driven guy. He's put together a great team at Vizsla. We acquired the Panuco project, and Mike's driving that forward. We've made a number of discoveries down there already on the field, and we're looking forward to more results coming out of there. We're still drilling there as of today. I'm not sure how much longer that will go on before Mexico goes into lockdown, but that's one of the most exciting projects I've ever been with. Mike's consolidated an entire, district in a previously underexplored part of Mexico there at Panuco. So we're excited about that. What else can I tell you? I'm the chairman of Skeena, as you mentioned. Skeena's got the old Eskay Creek and Snip mines we acquired off Barrick. So, they're very exciting projects as well. I love, if you can get anything out of this, you'll find that I love high grade projects. And that's what we've got there in each of those three companies. And that's, that's what you need, a fundamental building block to building a high margin mine. And that's what we're always about.
So, Resource Insider members, and myself included, are invested in Vizsla. Many of us came in. You may or may not know, a lot of our members are also indirectly invested in ISO and NextGen through our Resource Insider Uranium Fund. So, a bunch of money has been allocated to those two companies. You mentioned you love high grade projects. Do you think that's sort of the cornerstone of these companies? Can you explain for a second why that's important for investors at home who maybe haven't heard that before, who are looking at different mining companies? What is the advantage of a high grade project compared to something that's just massive but maybe lower grade?
Yeah, absolutely. Of course, when it comes to ore bodies, grade is king. It always gets back to that. I'll give you an example there. When I spent the first 9 years of my career with Rio Tinto exploration primarily, a little bit of time with business development, exploring for various different types of ore around the world, including iron ore. But I remember back in about 2007, Lee Clifford was the CEO of Rio Tinto, and he came into our office and dragged all of 200 of us out into the atrium and gave us all a right dressing down. It was quite a stern dressing down. And he said, look, you buggers, it's lucky that we have some of the highest grade and best ore deposits in the world, our true tier one ore bodies, because we're useless at getting them out of the ground. So grade can hide a lot of sins, even for a big company that I think actually does a pretty good job of getting them out of the ground cost effectively. It ticks a big risk box when you come to developing a project. Of course, you've got to divide that up between open cut versus underground mining or in situ leach mining and all of those things. But grade is fundamentally what gives you, you need that before you can have a high margin mine, in effect.
Involved in so many different projects in different parts of the world and different commodities, are there any similarities across your portfolio companies you're involved in that, in terms of how you are managing this crisis, what are the kind of things that companies need to be considering in terms of keeping personnel safe, in terms of keeping supply chains open or undisturbed as much as possible, and frankly, for people listening at home, maintaining shareholder value as best as possible in a very, very volatile and tumultuous time?
Yeah, sure. Well, as I mentioned there with that Rio Tinto background, the first priority is always safety, the health and safety of your people. So you must make sure that that's all, that they're all looked after, all well. Here in Vancouver, given what we saw 3 weeks ago, we actually shut all of our offices, a few days before everyone was given the sort of lockdown order, because we thought, okay, we can actually manage our businesses from home. We don't need to take any risk around this. So, looking at those risks and managing that. Our site's a little bit different. We at IsoEnergy, we shut our drill campaign down about a week ago. We looked at those risks and weren't too concerned. I think we're still drilling in Mexico today, although, we'll look very closely at that over the next few days and work out what we need to do. And so managing those safety risks is crucial. And then once you've got that in hand, for us, it's very much around. And of course, we all got beaten up, of course, with the collapse in markets in recent times. We don't worry too much about that. We take the view that this is a very short-term phenomena. Metals and mining will still be in great demand coming out of this. Of course, we see Trump tweeting today that a lot of those trillions of dollars that he's putting to work in his stimulus packages will go into infrastructure spending. Now, that could create a massive, massive boom in metals, of course. So we don't worry about those things too much, the short term. In fact, I spent 2 weeks where I didn't look at our share price at all in any of those companies, because you're on a hiding to nothing. You know that they'll come back, and they've started to do that in recent times. Just stick to your knitting and manage what you can. and keep doing good work and putting out good results, we'll take care of that. But then another key factor of all of that is, okay, where are we at in terms of our cash balance? How does our spend look? And so we've been looking very closely at all of our budgets across all of those companies. We're very we raise money when we can, and so that means that all of our companies are in a great position where we're all very well funded. And if this went on for a prolonged period, we can certainly last the next 2 years in any one of those companies I'm involved in. So we're in a neat position on that front, but you look very closely at that stuff. I can tell you that in Skeena, we just announced just before we went into this horrible period about 3 weeks ago that we're raising $20 million. That's gone well. And that tells me, also in EMR Capital, the guys are out raising Fund 3, and that's a very big raise. And so the interest there for both those companies has been very strong. So we know capital is still out there for good projects and good people. We've got that covered. We've got all those issues bedded down and manageable. So, and beyond that, really sort of sticking to our knitting and making sure that the projects are moving forward. We're doing as much as we can in all of those companies on paper. At ISO, for example, we've now got all of our results bar one set to come in the next couple of weeks. I should say people should keep an eye out for that because the scintillometer results in those last 2 holes were nothing short of extraordinary. And those results will be out in the next few weeks, so people should keep an eye out for that. But so you complete those work programs, and of course you've got to take a bit of time to sit back and assess all of the results you've got, put them into your models, see where you're going, and work to plan out the next phase of drilling. So, the great news in all of that is that we're not too far off track. I don't think we'll be delayed at all too much on any of those projects. So we're in a neat position.
So you mentioned EMR's out raising Fund 3, is that right?
That's right.
Now, I assume, for those who don't know, EMR is a very large private equity firm based out of Australia. They've got billions under management. And I would assume that much of the capital they raise is from traditional sources for private equity, generalist investors, pension plans, maybe sovereign wealth funds, that sort of thing, people that are not mining expert. Now, are you guys seeing a heightened interest in mining and precious metals projects at this time from the generalist crowd? Or are people kind of pulling back and they're waiting and seeing what is the sentiment on these big sort of money allocators out there in the world right now?
Yeah, good question. I think, post the sort of start of this downturn, this prolonged downturn we've been in since about 2012, 2013, a lot of that generalist money has dried up, and it's been guys like the team at EMR, Jason Chang, Owen Haggerty, the chairman, executive chairman of EMR, that have got great track records, have been able to raise money and keep going. And as you say, EMR's got about $2 billion US under management now, including, and then $5 billion of assets under management. So it is a very big fund. They've had a good baseload of level of interest from the generalist funds and those endowment funds and things that funds that invest in those sorts of businesses. Although, we're a long way off where we were in, say, 2011, when there were vast amounts of capital available to those companies. And I think we'll get there. The mining industry, of course, is one of the sort of most cyclical businesses in the world. I think, you see what's happening in the oil patch at the moment. I would expect some of that money will come out of oil investments and go into other forms. And of course, the sort of ratio of industrials to mining investments at the moment is just about its all-time low. So we know that there's deep value in the mining sector, so that money will come back in slowly. And then if you look at some of the other things that we're doing, we've had quite a bit of generalist interest in the US picking up in the last 3 or 4 months. I think you've had guys like Ray Dalio talking about moving into gold more and more. When that happens, they're usually at the leading edge of those sorts of things, those thought leaders. And I think we're seeing a lot of those generalist funds try and get their head around how to invest in the sector. Of course, a straightforward way for them to do that is through EMR Capital by backing a team with a track record. But, we're even seeing now, and certainly at Skeena, as you'll see in a few days when we announce our closing of that placement that we're doing, that's been heavily supported by generalist funds as well. So, it's clearly building. Money's starting to come back to our sector. I think we're at the very start of what will be a massive resources boom.
So I have a hypothetical question, and it's actually something I've been thinking about for the last couple of months now, and I think you'd be the perfect person to ask. Um, there are big funds in the mining space. There are the EMRs. There's the RCF. There's Orion, Pack Roads to a lesser degree. There are some of these big funds that have billions under management. However, they are tiny compared to the more generalist funds, the Bridgewaters of the world that have hundreds of billions and sometimes trillions under management of these really, really big funds. Do you think we get to a point where in the world where there is maybe it won't just be mining focused, but a commodities focused fund with mining and energy and agriculture, etc., that can rival these big, big, big funds that have been focused on other industries, be it tech or partial oil and gas? Do you think we ever see $100 billion resource focused fund? I've wondered that for a while, and I don't know the answer to that, but
Very, very good question, and my answer will be a little bit philosophical because, at the moment, I don't know the combined market cap of our global mining sector, but it's probably in the order of, might be lucky to be $1 trillion. Look at Rio Tinto, BHP combined market cap there, 300-400 billion, and then we fall away from there. So, if it's only $1 trillion. That's about the market cap of Microsoft or Apple, and then the market cap. I haven't looked at Saudi Aramco in recent days, but about 3 weeks ago, Saudi Aramco, one oil company, albeit the biggest oil company, had a market capitalisation of $2 trillion, which is double the size of the resource sector and the mining sector in total. And what that speaks to for me is the fact that the planet end users ultimately don't value these natural resources, some of which are finite, not all of them, but we don't pay enough for what we get out of the ground. I think that will change over time. It's certainly, back when I started with Rio Tinto, for example, the iron ore business was at Rio. We used to dig the stuff out of the ground, put it on a boat, and get about, it cost us $15 a tonne to do that, and we'd sell it for $19 a tonne. So it was a low margin business. And then by the time I left Rio Tinto, iron ore was trading at about well over $120 a tonne. So you saw a step change increase in the value of that material coming out of the ground. That will happen again. We'll have to see that again to justify keeping on mining this stuff. And then if you look at I in one of my slides that I like to put up, the combined sales of oil and gas in the world are sort of about $1.8 trillion annually. You look at iron ore, copper, gold, or precious metals, they're sort of $100 to $200 billion type markets annually. So they're almost an order of magnitude smaller than oil and gas. So, and I think globally, the mining sector is probably about 5% of the world's invested money. So we're just a bit small, I think, is probably the message to justify a fund of that scale.
I guess it might come down to a lot of the pressure that's on the world right now on investors and companies to be more environmentally friendly, to take care of carbon emissions and all that everyone's no doubt familiar with seeing in the news. And if the idea of energy starts to shift from purely oil and gas and maybe a bit uranium into the metals and mining space, when the electrification, if we're going to see that money flow into developing copper and nickel and silver and the things we need to electrify things, are we going to see that revaluing of the space instead of a sort of nice to have mining product to a necessary to have energy product to heat and power and drive the world? Again, I am getting very philosophical here, but it will be interesting to see that transition over the coming decades. And if I think if what people are demanding happens, if the Greta Thunbergs of the world get what they want and there's windmills and solar panels, everywhere, that's going to happen.
Yeah, look, it does. You're absolutely spot on. That this is something that I'm very passionate about, and to expand on that point a little bit, you don't have to look any further than the uranium sector. Again, if you look to Saudi Aramco, Saudi Aramco produces about 13-14% of the world's oil and gas, $2 trillion market cap. The entire uranium sector, mining sector, has a combined market capitalization of $8 billion. So, basically 2 orders of magnitude smaller than the valuation of Saudi Aramco. Now, we're a sector that provides fuel for 10% of the world's electricity and 100% of the world's clean, green, zero carbon baseload electricity. So there's a complete disconnect between the true valuations of things. If the world is serious about going zero carbon and having cleaner sources of energy, then that must change dramatically. The uranium. I'm pushing at the moment that we should stop calling nuclear energy. It has some bad connotations. It's actually a very clean and safe form of energy, safer than any other form of energy, in fact. So I think we should drop nuclear completely and just call it clean, green, baseload power. But anyway, you need a serious realignment of values of the oil and gas sector for cleaner sources of energy, I think, as an example.
Well, have you seen that documentary on Netflix? I think it's called Inside Bill's Brain. It's about Bill. Oh my God, Bill Gates. I'm drawing
Bill
a blank
Gates.
there from it, but it's about Bill Gates and the philanthropic projects that he works on. Things from curing polio in West Africa to fighting greenhouse gas emissions. And
Mm.
Bill Gates, obviously a very smart guy. He basically locked himself away and studied the problem, and he came to the conclusion that the only way to fix it in the medium term is through nuclear power. And he tries to design more effective nuclear power plants and this, that, and the other. But when someone like that, who is not a mining investor and in no way incentivized to say that, and he's been taking a lot of shit from the world for saying that, but when he comes to that conclusion, independent of any aligned incentives with the nuclear power industry, I'd say that's a very, very good indicator of how serious people should be taking it.
Yep. No, spot on. Of course, one of the most brilliant minds the planet's ever seen there, and he's really, he's spot on. And I think he is sort of transforming people's attitude to nuclear power, to clean, green, zero carbon baseload power. I think we're seeing elsewhere globally a number of other green groups, lobby groups, and things are pushing towards nuclear power as well. So it's sort of coming. We're at the earliest of stages of that, of course, but we've got a bit of, I think generally the industry, you could say this about the mining industry as a whole, has something of a massive PR problem. We probably don't do enough to explain the great benefits of what we provide to the world. And some people just don't get it, the types of people that think that a glass of or a milk comes from a jug out of the fridge type people. So getting that message across and educating people about the importance of nuclear, I think, is crucial.
So, Craig, we're in a time right now where a lot of mining, exploration, development companies, they're all very depressed. Where you're involved in a lot of different commodities, precious metals, uranium. Where would you be focusing your portfolio? Where would you be looking if you were new to this space? If you had never invested in a mining company before, you didn't own any gold, but maybe your portfolio has just been crushed like everybody else's in the world. You've been listening to people like me and you and a few other, smarter, better looking people out there talking about the mining space and the precious metal space. And, you're starting to come around to the idea that this is something I should be dabbling in. Where would you recommend investors have a look and things they should start thinking about?
Well, firstly, I think they should subscribe to anything you're doing.
Good. I actually pay Craig to say things like that, so it's coming in handy.
There are pundits out there and other market experts that I think are very knowledgeable, like yourself, Jamie, that do a great job. Guys like Rick Rule, of course. You can learn a lot from those sorts of people who've got a lot of experience. It's a tricky place to invest. I think you've got to be very careful. You need to spend a bit of time looking at things. A couple of sort of key tenets of my own personal investment thesis are, not a bad place to start is the precious metal space. Gold, there's always sort of cash available for those companies. Rates of failure aren't great because of that. Aren't bad because of that, and there's always cash around, and you've got liquidity. So that's sort of important. The other thing I'd say is that, you can have a good project, but with bad people running it, it won't go well. I always take the view that back the people and find those good people. It's not hard to do in Canada. Guys like, Rob McEwen, Pierre Lassonde, those sorts of guys have got a tremendous track record of investing, so worth following those guys, because the good people will always end up with the good projects at the end of the day. So that that's not a bad perspective. I think in terms of commodity mix, there are things that we know and love. Precious metals, as I mentioned before, you've got to be invested in copper. Copper has a tremendous future, of course. Uranium is the energy power source for the future, and there's no better place to look to invest than in Canada, where we do have those giant mines and the highest grade and best margin deposits in the world. So some of those things. And then, for an investor, you've really got to look at what your risk profile is. Like, for me personally, I'm happy to take great risk and get into projects and back people very, very early, even at the exploration stage. And of course, exploration risk is all important and challenging to work out. And then you can invest all the way through to the majors and ETFs. And the like as well, if you want to get a perspective. But I think taking a bit of time to learn and studying, following people like yourself, Jamie, is crucial to get that knowledge before you dive in.
All right. Well, thank you for that. So my last question is, what are you going to do when you get out of isolation?
Well, I'm growing this darn COVID-19 beard, so that's going to have to go. It's starting to drive me nuts. Look, we need to get down to Mexico and up to Saskatchewan and have a look at our projects and take some investors out to see what we're doing there. And apart from that, I think I'll be at the pub and go and catch up with some friends. I think, one of the things I've learned out of this, talking to various people, is that, humans need social interaction and spending time with their mates and things, and it's all important to your mental health. So I'll be getting out and catching up with friends. Absolutely. I'd love to have a ski as well, but that might be over by the time we come out of this.
Yeah, getting near the end of the season of that one. I think Warren Irwin put it best in our last interview when he said, "When I get out of here, I'm going to party like hell, man." So,
well, and that's something to look forward to. You can imagine the parties we're going to have post-COVID parties are going to be extraordinary.
I've thought about that a bit, and airlines and all travel is being massively depressed now. But when the floodgates come back on, I think people are going to rush out of there. And it's going to start with business travelers. You just mentioned, you've got to get to sites in Mexico and Saskatchewan and elsewhere. I've canceled about 10 trips in a 4-month period. And when this thing ends, I got to catch up with them. So it's going to be back to back to back. And I think the tourists are going to follow pretty quickly there after that.
Yeah, I think you're absolutely right. You look at what happened after the financial crisis in 2008, and metals rocketed back to life. Prices went up, and we went through that massive second leg of that that massive boom that we had back in those times. And I think we're going to see more of that, and the spend on all things will be tremendous. So, I think it's a tough time at the moment, very difficult for everyone. But, when we come out of this, it's going to be an enormous boom in everything, including partying.
All right, Craig, thank you very much. And for those listening at home, please check out more about Craig at Vizsla Resources, IsoEnergy, or Skeena. If you like this video, if you got anything out of it, please hit like, please subscribe to the channel, and just going to help us get this out to more people. Very much appreciated. So, Craig, thanks for taking the time out of your day today.
Thanks, Jamie. Great chatting with you as always.
All right, talk to you soon.